Right, good morning to you all. So, those who are in online, can you hear? Can you see? Okay. Those who are in online, can you hear? Can you see? Yes? Okay, right, fine. Sorry for the bit delay. Okay, we'll start with the discussion what we have discussed in last week. Right, so again that continuation of another aspects of contemporary matters in accounting. We'll look into some aspects. Right, one area is we have discussed last week regarding, yes, integrated reporting, and one of the others IFRIC again, that is IFRIC 13 customer loyalty program. So we have discussed that aspect. So if you recall, if we recall what we have discussed in the integrated reporting, so it is that link all activities and report on that. So it's very important, right? So to what extent we report on that. So that will have been, that has discussed in our discussion. So today we supposed to discuss another important area, that is one of the areas the fair value accounting, and again so harmonization of accounting standards, right? So another aspect is accountability, right? Those are the areas what I am trying to discuss today. So we'll see that how do we link all these aspects for the accounting quality, right? I think you are aware on the accounting quality, right, or the financial reporting quality. So everything leads to that. Why? Why accounting quality is important? Why? What is accounting quality? What is accounting quality? Have you heard about accounting quality? So we'll come with that. What is accounting quality? Right? Any idea about that? What is accounting quality? Yes, those who are in online, any idea? In simple form, what is accounting quality? Sorry? Yes. So submit, or that provide useful informations, all useful informations for the users, decision makers, right? Make the correct disclosures as much as possible, right? Put the voluntary disclosures as well, not only the mandatory disclosures. Why? Then it is very transparent and user can understand. So these are the ways and means of calculating this and that, right? So make all the assumptions. So you know that now we are going with the fair value. So when it comes to the fair value, we will have a lot of estimations for non-tradable assets and liabilities. So then we have to estimate that. So how do we estimate that? Right? How do we estimate that? So then we make all the estimations based on what? Based on the assumptions. So assumptions should be more realistic, more reliable, more practicable, right? So then you want to disclose those things. These are the assumptions we have made. So these are the ways and means we have calculated this and that. right? So that should be disclosed. Otherwise, that just put the figures, nobody knows how to get it. So what is the most important point is once you disclose all the aspects or all the things in the financial statements as notes, then reader can go through and understand what it is, and he or she can justify by themselves, so whether this is realistic or not. Based on that, they will be able to make their decisions. That is very important aspect. So accounting quality leads to that more comprehensive informations, and with a lot of the disclosures. So which will be very much helpful for the economic users. Economic users. Right? So that is again, integrated reporting leads to what? To improve the accounting quality, not for anything else, right? Because as we discuss, the user, what do you call that, owners and the people who manage the business, that is the management, are two different parties. So management is having the responsibility of reporting on the financial statements, basically the fair presentation and the preparation and fair presentation of the financial statements. So they will do that, right? So then we want to make sure that whether those are correct or wrong, or whether those are realistic, relevant and appropriate, right? So that is the the responsibility of the auditors as well. So that's why you will find audited financial statements, right? So then again, so those audited financial statements should be more comprehensive, to the level where that any user can understand, as well as so comprehensive they will be able to get very comprehensive understanding for their decision making process, right? So that will lead to the accounting quality. So then if that investors or potential investors or the existing investors or the other the interested parties, that is a lot of stakeholders are there, right? If they look into those matters, right? So then they will make whatever the economic decisions based on these financial statements. That is very much helpful for what? Finally for what? For what? Business growth. Business growth means what? Economic growth, right? If the businesses are growing, then the economy also growing, right? If the business is not growing, businesses are not growing, so it means that the whole economy is not growing, right? So therefore, so these that requirements, or these concepts, these operationalization of these concepts will help to economic development of any country, right? So these are not very narrow concepts which is restricted only for accounting. No. So we'll discuss that again. So fair value accounting aspects. So then you will understand to what extent that fair value is critical for the economy, right? So fair value accounting leads to, in some cases, to destroy the economy as well. So there are researchers on that. We will study on those aspects. We will discuss on those aspects. Right. So I think you have discussed this, the research document at the beginning. So to get an, that link for my discussion, to get an approach for my discussion, I will just remind what you have discussed with this, the research article, very important research article. So that will discuss very, that important, very, that comprehensive way, right? And more importantly, so they have prioritized what are the most important or the critical contemporary issues in accounting, right? Contemporary issues in accounting for a business. So if you can remember, so the first or the one of the, the issue is what? Right? Corporate governance and related controls. What is corporate governance? I just want to summarize what we have discussed, right? I don't want to repeat what that what you have discussed at the beginning. Just to summarize, to get an approach for my discussion, right? The thing is, all these concepts are not isolated concepts, right? All are linked together. So therefore, we should understand with that link. That is the logical teaching and learning process. That is what is required. Not that the different or that individual discussions on other whatever the topics or that contemporary matters. Right. So corporate governance and related organizational environmental structure and must be established and maintained. So basically that focused on corporate governance. What is corporate governance? What is corporate governance? Sorry? Rules and regulations. For what? For each and every company must follow. Yes? Any other idea? Those who are online, please make your participation interactive way. What is corporate governance? Yes? You have discussed corporate governance with the other subjects as well, so therefore we don't take that part, but we should get the application for that. Yes? Sorry? Corporate governance reduce the risk of the investors. Okay. Now basically what is corporate governance and why does it important? So we should understand that first. You discuss corporate governance, right? So basically you should understand what is corporate governance and why it is. As we discussed, there is a agency cost. There is a relationship between agents and the owners. Or what do you call that? Agents and the principal. Right? Principal is the owner, agent is the management. Right? So then agent is serving for the principal. So two different parties with two different objectives. Why? Owners require what? More profits and more dividends in simple terms. Management require what? More salaries and other benefits from the employment. If you go for more salaries, then owners have to sacrifice what? The profits. Right? Salary is the expense of income. So then owners have to sacrifice the profit, reduce the profit. So then there is a contradictory relationship. That should be balanced. So obviously that management should get the salaries, it's all right, to the reasonable level for their effort and their capabilities, otherwise they won't work for that particular organization. It is of course, but it should not be unethical levels, right? So therefore, there is a contradictory relationship. So there should be a balance between those two parties. That balance will be formed from how? Through the corporate governance regulations, right? So just to give the simple example, to decide the salaries, you discuss, you can tell me, discuss to decide the salaries of the management. So you will have what? Remuneration committees, right? So to discuss about the internal audit matters, you have the internal audit committee. So that is included with that is consist of executive, non-executive, independent and dependent parties. Yes or no? Yes. Right? So then, what is corporate governance? It talks about what? It tells the company, directors and the management, so on what? How do they operate and direct the business? So in simple terms, how do they should operate the business? So then once you set the salaries, so this should be the regulations. Once you appoint the internal auditors, external auditors, so then get the internal auditors committee meetings, whatever the recommendations. Audit committee meetings, right? So the way that the company is directed and controlled is termed as the corporate governance by the management, including the board of directors. The way that the company is directed and controlled by the board of directors is very simply termed as corporate governance. Now, why these corporate governance regulations are important? Now you understand what is corporate governance. Why it is important? So all of us think about ourselves. We are thinking about ourselves. If you think about the company and ourselves both in a reasonable way, so we don't ask for the higher salaries. Unnecessary or unethical, injustice salary increments. We try to get the maximum, right? So that's why these regulations are required. So we don't keep the actual, in terms of broader aspects, we don't keep the accountability. We'll discuss later on, right? Then you have to put the laws and regulations and make this the balancing situation, to make that balance in the financial statements and the as a company, not in terms of financial statements, to make that balance with the stakeholders, with the stakeholder engagements, right? So therefore you have to look into the corporate governance aspects. Then second aspect here as per this research, right? This is not a theory, but so as per the research, they have identified these 6 components. The second issue is account system and internal controls, right? Critical aspect. The second issue is accounting system and internal control. Now, I think I can integrate, or I can link with what you have discussed in auditing as well, right? If you have a proper internal control system, we can reduce what? If you have a proper good internal control system and that is put into practice, so then we can reduce what? Yes, those who are online. If you have a good internal control system in the business. And think about if you don't have good internal control system in the business. Yes? Sorry? Audit risk from the auditor's point of view, from the company point of view. So if the good internal control system, sound internal control system is there, yes, obviously you can reduce the audit risk. Apart from that, if you have a good internal control system, right, from the company's point of view, what are the benefits? Auditors? Opinion. No, auditor's opinion is from the auditor's point of view, no. What I am asking is from the company point of view. Yes. So why do you put the internal control system as a company? We should have the fundamentals. As a company, why do you put the internal control system in the business? Right? To safeguard the assets. To make sure that there is no misuse of those assets by the management or the employees. To safeguard the assets. To reduce the frauds. Right? So that's why you have the internal control system. And apart from that, so at the moment internal control system is more broader. So that is a part of the risk management strategies as well for the business. So that includes the risk management aspect as well. We discuss in auditing, right? So therefore, from the company's point of view, very much important to make sure that the assets of the business are not being misused by the employees, by the management. That is, it means that is used for what? That is used to achieve the business goals and objectives, vision and mission. That is, in simple terms, that is used for the business operations. Those resources are used for the business operations to achieve its objectives, vision, mission and all that stuff. Right? So that means again we are achieving our objectives, vision and mission. Therefore, so internal control system is very much important and critical for the business growth and proper accounting system. We so far discussed a lot on accounting quality, right? Good financial reporting system, integrated reporting. What is that? These are all about accounting system, good accounting system, which will be helpful for the users, stakeholders of the business to make the economic decisions. Right? Because the thing is, outside people won't look at our business. No growth. No investments. If the bank is not going to give the loan, so how do you do the business? If the new investors are if the new investors are not doing the investments in our business, they don't purchase our shares, we can't grow. So therefore, as a business, we are involved with the whole society, whole community, irrespective of the borders, irrespective of the countries, right? So therefore, that account system as well as good internal control system is very critical, very important. Right? Right. The third aspect is what? Third critical issue emphasizes the accounting measurement and estimations. Accounting measurements and estimations. Yes, very critical again. Not like earlier. Why? As we discussed, we are going with, now we are doing the lot of accounting and treatments with what? What is our behind concept in our financial reporting? Sorry? Huh? Going concern is that continuity of the business? No, no. What I am telling is when we are doing the financial reporting, so we use what now? With the IFRS adoption, we use what? We do the accounting based on what? You discuss a lot of things by keeping that concept. Sorry? Huh? Accrual concept? Accrual concept is alright, it is very, I mean that basic concept. No, what I am telling is so more important concept, and again with the IFRS adoption, we will work with that, we will comply with that. What is that? Almost all standards, IFRS, ISS is talking about what? Those who are online? Yes? Can you give the answer? Yes? Yes? Based on what? Right. So how many standards we have discussed? Share-based payment we discuss. How do you make the estimation for the share-based payments? Financial instruments, how do you value? How do you measure? Financial instruments. You discuss financial instruments. How do you measure that? What is the measurement criteria? Huh? Yes? What is the measurement criteria? Those who are online, what is the measurement criteria? Huh? Very basic thing what I am asking. How do how do you recognize the financial instruments? How do you measure that? What is the measurement criteria? Huh? Yes? Yes? Those are online? Yes? Fair value, nothing else. Very good. Fair value. All financial instruments and everything we now account with the IFRS requirements. What? Based on what? The fair value, nothing else. So all the standards talks about what? Fair value. What is the opposite of fair value? Sorry? Historical cost. Historical cost. That is the cost we have incurred when we acquire, when we construct the whatever the assets or liability or whatever it is. Right? So let's say 10 years back we purchased a land for 10 million. Now the value is 15 million. But we have reported on 10 million. That is historical cost. Now you report on 15 million. That is what? Fair value accounting. You get the fair value into the financial statements. Why? That is more relevant. Historical cost is not that much relevant because that is about the past, not the current situation. It doesn't tell you the current condition. So that's why you want to go for the fair value. That's why new standards or IFRSs, right? Making the that recommendation to adapt the fair value for the financial the account balances. So almost all you should go with the fair value, nothing else. And we'll discuss later on about the fair value accounting and all that, but you understand the links, so that then after that I don't want to discuss much on that. That's why I take this again for our discussion. That's why I told you this is very important for our discussion. So this is the base article for our all the concepts what we are supposed to discuss. Right. So therefore what I want to tell you is all are going to the fair value basis. All measurements are going with the fair value basis. So then for some of the assets you have a active market, but most of the assets you don't find the active market. So then if there is active market, yes, you can go with that. You can have the the criteria, so based on that you can make your adjustments. If it is not like that, if you don't find that, if you don't have that, right, what you have to do, as we discussed earlier, if you don't have such market, active market, we have to estimate the fair value based on the standards. We have to estimate the fair value. As we discussed, when it comes to the estimations, so that is the point where they are discussing. Right, go through with this paragraph. Accounting estimations and measurements. So I just take you into that the application of accounting estimation and measurements. Accounting regulations and pronouncements like those issued by FASB. What is FASB? Now Financial Accounting Standard Board. Allow for various methods and estimations for accounting for a type of transactions, say inventories and marketable securities. Many judgmental calls must be made to apply one method over another. Right? Those three researchers found that accounting judgment and method choices can significantly affect accounting information quality. One major issue is the disclosure, either mandatory or voluntary. Recent years have seen more voluntary disclosures because significant benefits can be resulted from more than less of the voluntary disclosures. Right? So that's why more disclosures are required to increase the accounting quality. Right? So when it comes to estimations, yes. So this is how we get the estimation. So these are the assumptions we have made. Then the reader can understand, go through with that and understand whether to what extent these are reasonable. Assumptions are all right. So they can assess the appropriateness or the the practicability, the relevance of these assumptions. Once you report on that, if you don't report, so nothing to assess. So therefore they are in trouble. So then definitely they don't accept these assumptions. They don't accept these as estimations because they don't have any information to make the assessment. So that is what is happening. So that's why more and more voluntary disclosures are required in case of accounting estimations. Right? So when it comes to the financial instruments, you see, so what are the disclosures made in the financial statements of the annual reports? You look into that. So a lot of disclosures are, this is how we have to do the measurement. Right? So that is required to improve the accounting quality. As we discussed, so they have considered the accounting quality. It's a separate aspect. So all leads to accounting quality, as we discussed. How to measure accounting quality and how to improve accounting quality. Quality is always an issue in accounting research. Examine the properties of accounting earnings throughout 40 years of history for quality related issues. Their findings show that accounting quality has been changing, but the fundamentals are more dependent on the regulations. Consistency of researchers have shown that sufficient disclosures can systematically enhance accounting quality. Though accounting conservatism is arguably the important character of accounting quality, research has found that more conservatism in accounting measurements and estimations do reduce low quality accounting reporting. More voluntary disclosures can increase content of quality of accounting information. Choices of appropriate accounting methods can also increase of accounting quality. Voluntary disclosures and its effect on accounting reporting quality have become one of the recent hot topics. Studies have found that linkage between improved disclosures and enhanced quality. Right? So therefore, as we discussed, accounting quality improved through what? More and more disclosures. So you have to go beyond the mandated disclosures. So then what is the the other disclosures? Those are the voluntary disclosures. It is not compulsory, but you can make those disclosures to improve the accounting quality. Right? Another aspect is internal and external auditing, right? So for what these already we discussed audit and assurance. So why do you find that internal and external auditing? For what? Now you have the internal controls in the business. You put that internal controls. Any business they may have. The levels can be changed, but still they are using. So internal auditors for what? To make sure that. So whether that the employees are compliant with those requirements or not. So then you have to make the recommendations, and continuous control should be put into the business. Right? So new branches are coming, new the machines are coming. So then your existing controlling mechanism is not that much enough, right, to serve the business. So therefore, definitely you have to increase the controls. And again, the present controlling mechanism is not enough. There are loopholes, there are drawbacks in that system. So then continuous development should be put into practice, should be forwarded by the internal auditors to the business. It's a continuous assessment, right, to make sure the monitoring. So internal and external auditing for what? To monitor the system. To monitor the system. So then employees and the management will comply with that. Otherwise, they know that, so this will be monitored by the other parties. So therefore, we have to comply with that. So that's why you have the exams now. As the students, you have the exam. What's the reason? Why do you have the exams? Right? To assess you. Otherwise, you don't follow that. It's a controlling mechanism. It's a monitoring mechanism. So likewise, internal and external auditing do the reporting on what you have done as the employees in the organization. The fifth topic is what? The fifth topic is the relationship between accounting and other disciplines. That's what I discuss again, right? So, financial informations are very important, critical for what? For the all economic activities. Why? So everybody look into the financial viability of each and every activity, right? So in simple terms, while doing this, transaction, we can earn a profit? Do we can get an excessive income? In simple terms, they will look into that. They will evaluate that. They will measure that. How do they can measure that? By going through with the financial informations, by doing the calculations, by using the financial informations, right? For that, they want to have comprehensive set of informations, right? So that will be done by the accountants, by the professionals in accounting and auditing. So therefore, if we make that decision, so we will provide the goods for that particular customer. We will purchase the goods from this particular company. So there are suppliers and customers. So we will give the loan for this particular company. These all are other third parties, external parties, right? We will give the tax exemption for this particular company. So with these requirements, that's by the government. New investor is coming from somewhere else, other part of the world, right? So they will take the investments and whatever the technology and other developments for our business. Everything will be done by evaluating what? The financial performance of the company, financial strength of the company. I don't say that is the only aspect that the others are looking to. No, that is one of the important aspects they will look into. Is there any financial viability? That will be evaluated through the financial statements you are providing, right? As we discussed, if the business is going well, lot of transactions are happening, lot of value additions are happening to the economy, fund movements are there, foreign earnings are coming to the country, right? So then what will happen finally? That will contribute for the economic growth. That will contribute to the economic growth. That is the ultimate objective in a business. I mean, in a broader perspective. While that enjoying the economic growth, owners can enjoy their profits and dividends and everything. Management can enjoy their salaries and other benefits. So everybody get benefited if the business is going well. And the other way around, if the businesses are not going well, no more lot of investments at the moment, so it's going like that, or stagnated. The things are not going in a expand or whatever that expand in way, or whatever the that developments phases. It's not going like that. If the thing is like that, the economy also stagnated or stuck, right? So therefore, this will lead to the good financial reporting mechanism will lead to the economic growth as well, right? And understand the link between the financial discipline and the accounting discipline and the other disciplines. The sixth critical component is what? Accounting internationalization or harmonization of accounting standards. What is that? What is that? What is that harmonization of or internationalization of accounting standards? Now what we are experiencing, we are applying international financial reporting standards, right? So the word has changed, IFRS, LKS, but the content is the more or less same, right? International accounting standards, nothing else. Yes or no? Yes. Right? We'll discuss later on in detail why we want to have that harmonization, internationalization of accounting standards. Right? Now we are experiencing. India, are they experiencing? I mean, internationalization, harmonization of accounting standards? Not to the greater level. China? No. But other part of the world, lot of countries are adapting, right? So a lot of arguments are going on. Some countries are adapting, including ourselves. Some countries are partially adapting, right? A lot of things are going on. So we'll see. We'll discuss on harmonization of accounting standard. So with our discussion, right? So now these are the 6 important aspects where we want to look into. So this is that the broader that perspective on contemporary issues in accounting or the critical components, critical aspects in accounting. So just to repeat, just to list down, what are those aspects? Corporate governance. Second one, accounting system and internal control systems. Third one, measurements and estimations. Fourth one, internal and external auditing. Fifth one, the relationship between accounting profession and the other disciplines, because as we discussed, accounting discipline is very much important for the other disciplines for their decision making process. Sixth one is internationalization. Again, internationalization serve for what? Internationalization of accounting practices serve for whole economy, throughout the world, whole world get into one business platform, one platform. So across over the countries, cross-border investments can be done, right? Irrespective of the geographical barriers, right? We'll discuss later on in detail about that. So these are the 6 very important critical components, or the what do you call that contemporary issues The researcher have been identified. The researcher has been identified, right? As per his research. From our perspective also we can accept that, right? I mean by ourselves, so somebody can incorporate some more, but this will talk a lot on those aspects, the very important critical aspects. So very good research article, right? So that's why I just take again, so even you have discussed that, so now you have the platform, you have the background to discuss my today's discussions, right? So one aspect is, you know, that fair value accounting, right? And this is again harmonization of accounting standards. So hope that you will have a very good background to discuss the rest of the aspects where what I want to discuss today, right? So we can have a 10 minutes break and come back with 10 minutes. So then we'll discuss the rest. Take a bamu. Makan. Mata? Oh. Hmm? Oh. Nè nè. Kawan deh. Lihatin lah. Mila main ke demo. Biscuit dapat එකක් විතර බෝ. ලේන් එකක් වගේද? පිටියක් බොමු නේ. ඔව් කිරි එකක් හදන්න. කොහොමද? මල ගෙදර ගාවේද? ඒ කොහෙද? ඈ? කෑගල්ලේ? කවද්ද යන්නේ? කෑගල්ලේ? කවුද යන්නේ? කෑගල්ලේ කොහෙද? කෑගල්ලේ කොහෙද? ඔව් කවද්ද තියෙන්නේ? කවද්ද තියෙන්නේ මලගේ? හෙට ලෙක්චර්ස් දෙකක් තියෙනවා. හෙට තියෙනවද? හෙටද අවසන් කළේද? හෙටත් දවසත් ලෙක්චර් එකක් තියෙනවා. හෙටත් ලෙක්චර්ස් දෙකක් තියෙනවානේ. ඔව්. 3:00 MBA. 3:00 6:00.
வேலை செய்யாது, எனக்கு சற்றே மேலாது. என்ன செய்யுது?
Now all right. Now all right. Sorry? Okay. It means during the break I have not stopped the recording. That can cut, no? Right. Right. So those who are online, can you hear? Can you see? Okay. Right. Okay. Fine. Thanks. Right. So with the discussion on critical aspects of accounting, so harmonization of accounting standard. So in now your sixth aspect in the previous research, that is internationalization of accounting standards. The same concept. So we'll discuss in detail here. What is harmonization of accounting standards? Right? Adopting one set of accounting standards, right? With the customization with the local requirements, local conditions, right? So it means basically we are applying same set of accounting standards all over the world. But it doesn't mean that it should be this exactly same. No. It allows you to, it gives you the chance for what? To make the customization for the local conditions as per the requirements of the local conditions. Right? You understand? That is called harmonization of accounting standards. That is what is called harmonization of accounting standards, nothing else. Right. Why this harmonization is important? Why? Right. So if we look into the IFRS's International Accounting Standards, that is more comprehensive. That is more what? Appropriate accounting methods have been identified, right? It is more advanced. I mean, advanced in the sense more accepted, much more accepted all over the world, right? In terms of quality, financial reporting, measurements, right? It is more appropriate. Everybody accepting. Right? It doesn't mean that that will be the most suitable accounting methods and treatments. That is continuously developing. IFRSs are continuously changing. Why? For the betterment of the financial reporting, to improve the financial reporting quality, to improve the accounting quality. Right? So that is what we are adapting from one aspect. From the other aspect, harmonization of accounting standards leads to what? To improve the uniformity. To improve the uniformity. Everybody is practicing same set of standards. So therefore you can do the comparisons between our set of accounts and the other part of the world, companies' accounting statements or financial statements. Yes or no? Can do. Right? If we have different set of accounting standards, if we are using different set of standards in two different countries, can we do the comparison? No, it is not realistic. Since we are using the IFRSs, we are going to the same accounting basis, same set of accounting standards. We are complying with same set of accounting standards irrespective of the geographical areas. It means that will lead to the more comparisons. So you can do the investments wherever the country by doing the comparisons. The foreigners can access to our market. Foreigners can do the investments in our market by going through by evaluating our financial statements. Why? We are going with the IFRSs. Right? So now again, so somebody can argue that some of the small and medium scale entities are not used in IFRSs. So it's still going with the historical cost concepts and all that, but we are talking with the big companies, with the PLCs. So then they are compliant with that. So practically, some small companies are not that much, familiar with those requirements. So it's a matter of our case. I mean, it's a problem with ourselves. So we should sort out, right? So with that IFRS adoption, so any potential investor, so from anywhere in the world, can do the evaluation based on our financial statements. We are using this IFRS or the ISS. So from ourselves as the learners, right, as the students, we are studying IFRS, ISS. Not something unique for us. That is unique for all over the world, right? So therefore, from our case, we can work anywhere in the world because we are familiar with the IFRS. As the accountants, we can work anywhere in the world. So from our perspective, because we are studying, we are practicing what? IFRS. So which is not specified for ourselves. So therefore we are, that everybody, so I mean everybody in the sense, from our case we can work other part of the world, right? So because we have that capability from our aspect, right? From the investor's point of view, we can get the capital markets all over the world, right? So therefore a lot of benefits are flow into the country with the harmonization or with the internationalization of accounting standards. Clear? So that's why I mentioned here, in certain cases it can prove to be crucial to the economic and financial development of a country. So that's what we discuss. Yes or no? Yes. The second aspect is it enables a systematic review and evaluation of the performance of a multinational company having subsidiaries and associates in various countries. Right? You understand? We can review. So that other aspect, in the same set of company, let's say Unilever's. Right? Here you have, other part of the world you have. So then how do you evaluate the companies where those companies are operating have a different accounting standards, different accounting measurements? How do you incorporate those aspects to one set of financial statements to discuss the consolidation as well? Right? Since we are using IFRS, yes, no issue. All are in the same format, all are in the same platform. Right? It makes the comparisons of performance of company against domestic and international peers easy and more meaningful. That's what we discuss. Since it will give the uniformity, you can go with the same set of standards, same set of comparisons. It adds to the international credibility of a company. Right? It is a precursor for access in international capital markets. That's what we discussed. Which can in turn reduce the capital cost and consequently improve the performance of a company. It provides a level playing field where no country is disadvantaged by its gap. Right? So therefore, it's very important, it's very beneficial for an economy or a business to have a harmonization. Right? Harmonization doesn't mean that so all the aspects you want to comply with the IFRS, so the ISS, no. So it gives you the chance, it gives you the room for what? Opportunity for what? To change the IFRS or whatever the standard for the domestic requirements. right? So it gives you the very clear definition here. What is harmonization of accounting standards? Harmonization of accounting standards can be defined as the continuous process of ensuring that the generally accepted accounting principles are formulated, aligned, and updated to the international best practices with suitable modifications and fine-tuning considering the domestic conditions, right? You can apply the generally accepted accounting principles in terms of international accounting standards by making the changes, fine-tuning the, right, based on the requirements of the domestic aspects. You understand? Therefore, this is not a copy. This should not be a copy paste from IFRSs. I mean that applying the accounting standard should not be a copy paste from the IFRSs. You can use that, no issue with that. If you believe that to make more better picture, more better, or to make that more disclosures, right? I mean more fair presentation on the financial statements. You want to do a slight change, do that, no issue with that. Make sure that it will give the more benefit to the stakeholders, right? So do that fine tuning and get the requirements required to make the change. It's a must. It ensures, we just missed this point, it ensures reliable and high quality financial reporting disclosures. I just start from that point, right? So if you use the IFRSs, because it has been researched and get the, the comments from the all over the world, and that is fine tuned into the very, good level. So therefore we are using most appropriate method and, the measurements and techniques at the moment. Still it is developing with the changes. So that's why day by day you will find new standards with the amendments. That is for the improvement. It doesn't mean that the others are wrong, but the improvements are continuing for the future. Right? A lot of amendments are coming in because the market and the business environment is getting changed. So with the changes, with the developments in the economy and the markets, so our standards also getting updated. Make the revisions. So this is to measure the harmonization. So this is Australian research document, right? So the Indian GAAP, US GAAP comparability index, that conservatism index. So that is not much important. The concept is important. So we don't want to measure to what extent the countries are adopting the IFRSs. It's not our discussion. Our discussion is to get the concepts. So what is harmonization of accounting standards? What are the benefits over there? Just to finish our discussion on harmonization, get that the conclusion. Harmonization of accounting, harmonization of multiple and diverse national gaps is a huge and daunting task by itself, but it is the order of the day. However, suitable and adequate safeguards and safety nets as listed above also need to be built into national accounting and financial systems to achieve the objectives of harmonization. Right? So that's what we want to take from that point. So there, in the middle they have that in this document to what extent they are using that aspect. So that is not that much important for our discussion, right? So we want to get the concepts over there, right? So this is a document created by Chartered Accountants of Australia in January 2003, but still it is valid for us. right? That's why I take this, right? This is again I discussed something about this, but I just want to incorporate this aspect for our discussion, because if you keep that, if you maintain the accountability, all the issues will be sorted out, can be sorted out. We'll discuss what is accountability. What do you mean by accountability? You want to make your comment on this. Accountability means what? Accountable. The similar, I mean, somewhat similar word is there with the accountability. What's that similar? Somewhat similar, I mean, not exactly the similar word. What is that? Accountability and? Yes? Yes? What is accountability? Please make your comment, those are online. Yes? What is accountability? Yes? Any idea? Now in this semester, a few more lectures to go, right? Just to remind you that your presentations for auditing will be on the last week of the semester. That when now this is 13th week. Or 12th week. 13th. I informed in advance. This is 13th, I think. Sorry? 13th session or 13th week? Huh? So far 12th completed, no? This week is 12th one? No, 13th, I think. Okay. Okay, I will check with the office. Anyway, 15th week we have the final week, we have the presentation for auditing. I will put into the LMS exact date. Right, we'll come back here. What is accountability? What is responsibility? Somewhat similar, not exactly similar, somewhat similar. What is responsibility? Yes. Any idea? Those who are in online? Responsibility. Just to give that, basic understanding on that. Yes? Yes? So some sort of, responsibility means some sort of commitment. Right? Now, the thing is like this, already we discussed the agency cost and agency theory and all that. Right? So therefore, we should work as the employees for the betterment of the company. If we work for the betterment of ourselves, that is are we maintaining the accountability? No. As the employees, right? Not in our that personal life, right? So, as the employees, once we come for the work, we should work for what? For the betterment of the company, right? So, it means we want to work for the betterment of the company. How do we do that? We should work for the maximum level, not to the minimum level, not to the average level. It doesn't mean that every time you want to work, no. So, you should work and you should do the maximum for the business. And you should be able to justify your action. You should be answerable for your work. You should be answerable for your decision. You should be able to justify your decision. Because of this reason, I have made the investment here. We will earn 20% return. That is the expectation. That's why we did the investment here. Sometimes that may be wrong decision, but should be able to justifiable. Right? So that is the accountability. To what extent we can be justifiable by ourselves for the actions we have made, we have done, for the decisions we have taken. So you understand now, if we maintain the accountability, there is no issues. There are no issues. Right? So therefore, this is a mental or this is a culture we want to create in our mindset. Right? But practically, the employees and the people are not doing such. That's why you will find all rules and regulations to take into the level of accountability, to take into the accountability, to take into that, to keep the accountability in a forcive way. Right? Simply, so voluntarily we don't keep the accountability. We work for the betterment of ourselves, not for the betterment of the company. That's why, within that working hours, we do our personal work as well. Right? Normally, that at the end of the year, you will have the annual leaves and all that. So, you will get all the leaves at the year end. So, to enjoy that, the benefits of the company. Right? So, you don't have any work. So, just get that leaves because, that cannot be carried forward and all that. So, that is what? If you don't have any work at home or if you don't have your personal work, still you are getting that. Because you are eligible for that, it's all right. But still, if you can work during that particular period of time, right? It means part of accountability. Just give the simple example, right? Since we are not maintaining the accountability as an employee or as an management of the company, so there is enforcement through the rules and regulations to keep you accountable for the work you are doing. How? That's why you have the corporate governance. If you are maintaining accountability, do you believe that there is a necessity of other rules and regulations? No. But even we discuss in this way, but including ourselves, we don't maintain the accountability. Therefore, rules and regulations put into practice. It is a must. It's a must. Right? Right? So think by yourselves, to what extent we are accountable in our working environment. We will keep the accountability, yes, of course, but to what extent? Right? Can you improve the extent? That is what is required. Right? If you maintain the accountability by ourselves, so there is no such rules and regulations to be stipulated within the businesses. Right? Voluntarily we are doing our work for the betterment of the all stakeholders, including ourselves. So therefore, as we discussed, this is a mental mechanism or mental thinking, mentally we want to develop by ourselves, right, in our mindset. Clear? Then the next question is, in our organizations, how do we create such mindset in the mindset of our employees? It is very difficult, including the management. So basically the management is somewhat accountable, right? So when it comes to that educated crowd, somewhat accountable. So we are having the responsibility to report on the others, and we should be, that finally should be responsible in simple terms for the owners and the other stakeholders. We should be responsible to give a return for them, reasonable return for their investments. We should pay for the external dues. It's our responsibility. It's our commitment. Right? So therefore, management should have that accountability. They may have to a certain level, even they want to increase the accountability by themselves. Right? How do we create such mechanisms in our corporate business environment? Right? In this research, the researcher I don't discuss in lengthy, some of the aspects. Four aspects Abstract in the article, we contend that viewing the organizations through an accountability lens in terms of source, focus, salience, and intensity helps illuminate issues of governance and ethical dilemmas common to most individuals at work. We also propose that disconnects between aspects of accountability may pressure individuals to behave unethically and seek to rationalize their behaviors. We suggest that accountability is not only an organizational requirement but also a perceptual lens that can be used to observe and understand behavior in and of organizations. As such, demonstrate herein how to make better sense of functional and dysfunctional behavior in organizations by applying the accountability lens. A key component of this accountability lens is the notion of an accountability environment. Those aspects of an individual's immediate work environment that directly affect the subjective interpretation and experience of felt accountability. The notion that individuals perceive and interpret their accountability subjectively is critical to understanding why multiple employees can behave differently and sometimes unethically under the same accountability conditions. Right? So now you understand this is a aspect, this is a concept where we want to create in our mindset. If we create that accountability mindset in our mindset, so then we can sort out a lot of issues. It means we all work for the betterment of the whole society, whole stakeholders in the business, including ourselves. If the business is going well, we also enjoy out of that as the employees. Yes. You see the definition. Accountability refers to a real or perceived likelihood that the actions, decisions or behaviors of an individual, group or organization will be evaluated by some salient audience, and that there exists the potential for the individuals, group or organization to receive either rewards or sanctions based on the expected evaluation. What does it mean? This is a broad aspect of this. Evaluated by some salient audience. I will start from that point. Evaluated by some salient audience. What is that? Who is the salient audience? Whose actions, decisions or behaviors whose actions, decisions or behaviors will be evaluated, either groups or individuals? Whose actions, decisions, behaviors are being evaluated? It's the management and the employees of the organization. Are evaluated by whom? Salient audience is whom? The other stakeholders, including shareholders. Right? And there exists the potential for the individual, group, or organization to receive either rewards or sanctions. Based on the evaluations, they will be rewarded or put the sanctions. It means if the business is going well, right? So management, including employees, will be getting more benefits. Other way around, so they will be getting less. Right? For you to maintain such atmosphere in the business, everybody should be, basically the management and the employees should be accountable. Right? This is the perceived likelihood. In simple terms, if you work for the betterment of the company, business will be benefited. You see, a lot of businesses collapse due to what? Due to incorrect decisions made by the management. Right? Lack of controls. All are the problems with the management. So it means they are lacking with the accountability. If we maintain that such accountability in the business, so we can get more benefits. We can get more benefits. Then the shareholders are getting the benefits as well as the employees of the company as well. Even the other parties. Right? Maybe the customers, maybe the suppliers, government, everybody benefited. You can go through with these, the things, so then you will be able to understand in detail. So if you don't keep the accountability, lot of problems will create. And another important aspect we want to just to recall, right? So if we maintain the accountability as a business, we don't make the environmental pollutions, right? We do something for the society, right? We discussed in the last week about the sustainability reporting, right? CSR, corporate social responsibility. We do something for the society if we are accountable. We discussed in the last week. That's why I tell you, so everything linked together. These are not isolated concepts, right? So therefore, in simple terms, what we want to create in our employees' mindset is what? The accountability. To what extent we are answerable, we can be justifiable. We can justify our work, our decisions. Right? That should be reported. Then anybody can evaluate your work. Anybody can understand your work. Right? Right. Do you believe that can you create such culture in your environment? It is challenging. It is challenging. So that's why, as we discussed, enforcements are there through corporate governance, other rules and regulations, internal controls. If you don't voluntarily do that, so as per the legal requirements, we want to do that. So there are 4 aspects they have discussed in this research. Accountability source. Right? What is that? the source of an individual's sense of felt accountability in the firm. The next point is, I will take one by one. The degree to which an individuals are held accountable for their decisions, process, or the outcomes of their decisions at work. Understand? That's what we discuss. The degree to which an individual is held accountable for significant outcomes. The degree to which an individual is held accountable to multiple persons and for multiple outcomes in the same organization. What is this? The sources of an individual sense of felt accountability in the firm. That is accountability source. Next point, the degree to which individuals are held accountable for their decisions process or the outcomes of their decisions at work. Accountability focus. Third point, the degree to which an individual is held accountable for significant outcomes. Accountability salience. Basically, the top management should be accountable for the significant outcomes. Right? The degree to which an individual is held accountable to multiple persons or multiple outcomes in the same organization. Again, top management is focused on that. Top management should be responsible, should be accountable for the government, for the customers, for the suppliers, all the parties in different commitments. For the government, how? By making the payment for the tax. For the customers, by providing the quality product, hygiene product with the correct time. Suppliers, they should maintain the responsibility, they should maintain the accountability to make the payments on time. Right? So therefore, now you understand, if we are maintaining such good practices, automatically we are accountable. Have you thought about this? The accountability. This is a very broader concept. Right? If you maintain the accountability by ourselves, we can minimize a lot of problems, issues. Right? But again, very difficult to maintain because our mindset is going for some, that directions. Right? It's not with the fair direction. It is something beneficial for us. It's the nature of humans. But if we can create such, it doesn't. It means it. I don't think it's wrong, but it's okay. But we should have a balance, right? That is what is required, right? I don't want to discuss in detail about those aspects, so just take that important concept and have the basic understanding. So that has been discussed, accountability salience, so and all that aspects in detail here. So I'm not going to take everything, right? So you can go through with that if the time permits, but get the application and the what is accountability, and then yes, what's the application of the accountability and how do you create such culture? So that's enough. And the importance of accountability, right? That aspect I discussed with you just to see that conclusion here. right? So just to get the conclusion for our discussion, we have proposed that we view an organization through an accountable lens in terms of source, focus, salience and intensity. That's what we discussed. Helpful illuminate issues of governance. That's what we discussed, right? And ethical dilemmas common to most individuals at work. We have also contended that disconnects between aspects of accountability may pressure individuals to behave unethically and seek to rationalize their behaviors. The behaviors most commonly exhibited by individuals caught in such situations are denial about the illegality or unethical nature of the action. So deny on that, illegal and unethical nature of the actions. Excuse making, notably that the actions are in the organization's best interest. Work to that best interest of the work organization, right? Actions are in the organization for the organization's best interest. Champion the notions that the unethical behaviors is fine as long as no fines out, right? So penalize on that. Presuming that superiors will support and protect offenders if they are discovered. Right. In any cases, lapse of accountability have facilitated some of the largest modern corporate and governance scandals. So if you don't maintain such accountability in your companies, in your business environment, definitely at any point of time, a lot of governance issues, scandals, a lot of issues can be created, right? So even we discussed in auditing that forensic accounting aspects. So everything linked. So nowadays, even our context, we are talking a lot of frauds and everything. What is that? It's a lapse of accountability, nothing else. If we are working as that, whatever the, serve for the economy or serve for the country, so then we should be accountable for the whole country. Likewise, if we are working for a company, so we are accountable for the betterment of the company, not for our betterment, right? Within this article, we have also maintained that the concept of accountability is a foundational element of organizations and their effective operations. Indeed, being held answerable for one's decisions and actions is an organization's requirement that ostensibly transcends hierarchical levels and applies to the lowest entry level employees as well as to the CEO. Right? In simple terms, this accountability should start or should come from lower to the top and top to the lower, right? So CEO also should be responsible for their work. Now what happened in our context is, low level employees are answerable for their work, it's all right, but when it comes to top level, they are not answerable. But it is not the case. Everybody should be answerable. From bottom to top, top to bottom, both aspects. That is what is mentioned here. We suggest, however, that accountability is more than an organizational requirement and can be viewed as a perceptual lens that can be used to observe and understand behavior in and of organizations. As such, we have tried to demonstrate how to make better sense of functional and dysfunctional behavior in organizations by applying the accountability lens. A key component of this accountability lens is the, sorry, A key component of the accountability of this accountability is the concept of an accountable environment. Those aspects of an individual's immediate work environment that directly affect the subjective interpretation experience of felt accountability. The notion that individuals perceive and interpret the accountability subjectively is critical to understanding why multiple employees can behave differently, right? Sometimes unethically under the same accountability conditions. By better understanding these behavioral variations, firms may ultimately be able to not only improve performance outcomes but also attract and maintain a more satisfied workforce, honest workforce, right? I think you think about this perspective, and finally, to create, final word is what? Honest workplace, honest workforce. If you maintain that, only we can create such accountability. Actually, honesty, what do you call this? Accountability is part of honesty. If you are honest, only you work for the betterment of the company. I mean, to a greater level. So, even by putting the laws and regulations, it's the minimum level. Then we work for that level, right? Okay, but we can create the mindset by ourselves. So we should work for the maximum level, or maximum, growth of the company. So it means we worked to the maximum level. We do so, we are doing so if we have a integrity in our mindset, if we keep the honesty in our mindset. Otherwise, we will work to the level what is expected by the laws and regulations. Understand? So therefore, we cannot create such culture by putting the rules and regulations. We can create such culture how? By developing the accountability culture in the mindset of the employees or the workforce. Right? We formulate the laws and regulations at least to take them into a certain level. Hope that you understand what I am telling. Otherwise, the employees don't keep at least the minimum level. If they have the freedom. So, but on the other hand, by just putting the laws and regulations, we can't get the maximum out of those employees. Right? If you want to get the maximum out of our workforce, what we have to do? We have to create such mindset, accountable mindset in our employees. Clear? That is what is required. Right. So you can go through with this. Again, that is discussed about the social responsibility. We already discussed even last week, and that's what I discussed with you. If we are accountable, we don't make the pollution for the environment. We work for the betterment of the environment as well as for the well-being of the society. It's a part of social responsibility, right? Right. Any comments? Those who are online? Yes? Any comments? Very few are in online. Apart from the physical, you are Sundaralingam? No. You are not in online? Only 2 are in online. 3, including myself. Including? No, only Sathaksran, Sandalingam, and Perera. Only 3. Only 3 are in online. So, any comments by yourself? Yes? You are in online, I mean, actively, or you just open and you go somewhere else? Okay, it's all right. Any comments you can communicate, right? Anything to clarify, anything to change? So I want your comments as well. Otherwise, I am doing, you are listening, or you just ignore that? Well, I don't know. Right. So this is what I want to discuss on accountability. First, therefore, please understand, so to create such accountability culture in your organizations. So how do you create such culture? So you can go through the research and get more comprehensive understanding on the things what we have discussed, right? So, and not only as a discussion, so you want to get the application of this for your working environment as well, right? It's up to you to decide, right? Since you are in, not in the, that lower level, managerial level, so then at least you can create such culture in your department itself, in your units, right? As I discussed, even integrated reporting. So you can think about those aspects, so, and the benefits over there, and try to apply those, concepts in your business environment. So that is what is expected in this level, that by pursuing that, master program, not only just to get the paper qualification, but to apply that concepts in your working environment and develop your career and to develop your business as well. Think about, I don't tell, focus everything, but at least, so whatever the things you can apply in your working environment, so if you believe that it is applicable and appropriate and I can do this, and so then and it is beneficial for our company and myself, and then think about those aspects. Right. So shall we move on to the fair value accounting aspects? So I want to discuss something more in those areas, or else shall we take that part in next week? Okay, no, we'll take that part to next week. So I have one more session, next week session I will be taking on fair value accounting and how do we account for the inflation? How do we account for the inflation? So, because we are having the inflation, right? So I just have a basic discussion on that with there is a standard on as well, right? And something about foreign exchange as well. So have you discussed about that I think you have discussed group accounts, right? So have you discussed about foreign subsidiaries? No, right? Just to give you a basic understanding on foreign subsidiaries, foreign operations and foreign subsidiaries and foreign business aspects. I just discussed exchange gain impact on our financial statements as well. Those are basic discussions just to get the understanding, right? So that part I will be discussing next week. So if you have any comments, you can communicate. Okay, so then we discussed today two aspects again. Basically we have a discussion on so critical aspects or contemporary aspects in accounting. So I don't want to list down again those aspects. So 6 components we have discussed. So with that we move on to the harmonization or the internationalization of accounting standards and identify what it is and the importance of making that harmonization in our context as a country, So then even the challenges also there. So you can go through with the document, right? So what basically just to tell you the challenges. What are the challenges by applying those standards in our context? So we sometimes we don't have such expertise, right? Some that cost we have to incorporate to create or to develop such accounting system in our business. So there is some challenging aspects as well, but still that big companies can do that, but still that small companies are not that much using that IFRSs, right? So but it will take some time, and then everybody will come into that level, right? So that is one aspect. And then so we discuss about the accountability. So actually, as we discussed, if we maintain the accountability by ourselves, so we can create very that ethical culture in the business environment to reduce the frauds, to work for the betterment of the all stakeholders. So we should maintain a mind with the accountability. So creating such culture is very much challenging, but still individually we can develop that. So then we can have, the what do you call that growth in our businesses, as well as the economic growth can be there. That is one aspect, right? So that is what basically we discuss. So with that, I want to discuss the fair value accounting. So again, so basic discussion we have done with the fair value accounting, and again you have done the fair value accounting based on the IFRSs. So a very good example is the financial instruments, and for the other assets and liabilities also you move on to the fair value with the IFRSs. But again, when it comes to the fair value, it's more relevant, right? More practicable, but again there are some problems as well as problems encountered with the fair value concept, right? We'll discuss all these pros and cons with the next couple of research documents. So then you will understand the the advantages as well as disadvantages, and what are the contemporary discussions are going on, contemporary issues on fair value measurement, right? So those things we can discuss next week with that. And I suppose to discuss some aspects about the inflation. How do we couple the inflation for our financial reporting perspective, as well as foreign exchange, that application for the financial reporting. So I just will take those aspects by next in next week. And so with that, I think we have done that conceptual discussion on contemporary matters in accounting. So most important contemporary matters in accounting, right? So that is my role. So hope that you will enjoy. If you have any queries, if you have any clarifications, you can ask, right? So in this perspective, you have to read something, right? So a lot of research documents are uploaded. Please go through with those aspects. Somewhat boring, but get the, not all, get the, what is the concept and its application, and how does it important for us. That's enough even for the exam and even for your thinking, right? So, right, that's what you want to take out of these things, right? So then thank you very much. So we'll see you on next week, right, with the subject. Okay, thanks.